How to avoid the 10% early withdrawal penalty? Well, first, what is it? The government penalizes you 10% if you take money out of any retirement account before reaching the age of 59 and a half. Now, why do they do this? First reason, they don't want you using your retirement accounts as a piggy bank. They want you to have money when you actually retire and need money. There are two ways to avoid this 10% penalty. The first is called 72T. Don't worry about the names and numbers, there's no quiz. 72T requires you to take equal payments for 5 years or reaching 59 and a half. If you use 72T, I suggest splitting it into 2 IRAs. Let's talk about IRA. It stands for Individual Retirement Account, which means it can only be in one person's name. However, each person can have more than one IRA. Why would we do this? Simple answer, things happen. Once you start taking from the 72 IRA, you have to take the same amount for at least 5 years. We put enough in the 72T IRA to cover your monthly expenses, and we put the balance in the emergency ATM IRA. Once you start taking from the 72T IRA, you have to take the same amount for at least 5 years. So if things happen, you need a place to access money. That's why we have the second IRA, which I refer to as the emergency ATM IRA. Example, you have $1.2 million in your IRA and your monthly expenses are $5,000. We need to put $1 million in the 72T IRA to generate $5,000 a month, and the balance, or $200,000, goes in the emergency ATM IRA. If you have an unexpected bill or need money, you could take a distribution from the second IRA. Depending on your age, there may or may not be a penalty. Sounds like a lot? Not really. I work with many of your associates, have several clients utilizing 72T. I'm very knowledgeable on this subject, and I'll be there every step of the way for you. The second way to avoid the 10% penalty is grouped into IRS Topic 558 and is specific to your 401k. Again, don't worry about the numbers, just that 2 exceptions exist. This exception is specific to your 401k. If you retire in the year you turn 55 or older, you have the opportunity to take a one-time penalty-free distribution when you roll over your 401k. I go into detail on my previous video how to roll over your Voya 401k. Example, you have $550,000 in your IRA, and when you retire, you want to take $40,000. 7 days after you retire, corporate tells Voya you're officially retired. We give Voya a call. We say we want to do a total distribution, and we want to roll over $500,000 to your IRA. And with the remaining $50,000, Voya takes 20% to satisfy your tax obligation, and you receive the balance, $40,000, as a penalty-free distribution. If you take that distribution, I strongly suggest setting up banking instructions. This is done by calling Voya at least 10 days in advance. You give them your bank account number, you give them your routing number. It allows them to deposit your money right into your bank in 3 business days. This is quicker and easier than receiving a check. So let's recap. There are 2 ways to avoid the 10% penalty: 72T and IRS Topic 558. Some of you will use one, some of you will use both. With my experience, it's easy for me to advise you which option or options is best for you. If you like what you heard, please like and subscribe. If you'd like to know more specifics on avoiding that 10% early withdrawal penalty, schedule a chat. Just enter into your browser chatwithsac.com.